Alright, good morning. Today is Saturday, and I typically don't put together a video for Saturday, but I want to give you a little bit more information here, what I'm kind of looking at. There's 4 markets that I'm looking at. I am the first one we're looking at, and you've heard me talk about this a lot over the last few months. It's the TBT, right? TBT, the symbol TBT. This is bonds. Right, 30-year bond inverse. This is ETF. This is an ETF. Right, so if you think interest rates are moving higher, this will move higher. So it's the inverse of 30-year T-bond futures. So 30-year T-bond futures move up, TBT goes down, and vice versa. But we're also going to talk about the 30-year bonds a little bit as well, and show you some things there. I want to talk about gold, and I want to talk about the S&P 500. Again, all these charts are daily, the daily time frame, okay? So the first thing I want to do here is, this is starting to get interesting, where I'm going to want to be buying this market shortly. Granted, what we're looking at here first, okay, we're looking at a 50 exponential moving average, this hot pink line. This is a 200 exponential moving average, so we're sitting right in between the 50 and the 200. These are the Kiltner channel bands. This is the upper, lower, and the mid, right? In a nice trend. And again, my software is on this chart. So look at when it's green, the trend is officially up. So when it's green, you can pretty much automatically buy it between the mid, right? The mid to the lower band, right? Make new highs here. Mid to lower, makes a new high again. Mid to lower, buy it again, right? Makes a new higher high, buy it again, makes a new high. Mid to lower, bounces up. Now it's starting to break down through this low. That's fine. Now looking at the, what I'm looking to do now. So you've had multiple nice buys on the upside here, okay? So what I'm going to take is my Fibonacci tool in TradeStation, click it here. So since it's an uptrend overall, I'm going to click it on the low and drag it to the high here, okay? All right, you got the 38.2% retracement right here. The 50% retracement of this big move is actually below the 200 exponential moving average, okay? These 2 white lines here, the horizontal line represents this low and this low. So I believe this level in here should act as support, right? Wherever we look to buy, if we're looking to buy the market in here, my initial catastrophic stop loss needs to be below the 200 exponential and below these 2 white lines, okay? So I'm going to let you know when I'm looking to do something in here. I'm getting close. Now, of course, if we pull down and created one of my price patterns, either an inside bar, I'd be looking to buy it above that high. If we got a bullish outside vertical bar with it closing in the bottom quarter, I would be looking to buy it anywhere in here. And I may be looking to sell puts against a further drop, because I want mine owning this ETF to the long side, okay? So again, we are dropping into an area where I believe, even though we've broken through that 50 exponential, we're trading above the 200 still, and if you were to plot a 100 exponential, we're probably sitting about right in here. So we are in an area now where we could be looking to potentially put on a trade. Now I'll let you know as we get closer to that. So, okay? Let's take a look at the 30-year bond futures. This is the 30-year T-bond futures. Now the trade has kind of gone, but let me just show you something that I like, that I look for. Obviously, the trend has been down, right? The bars, as you can see, all of these candlestick bars are red, and that denotes an official downtrend, right? Again, a daily chart, right? This is the average true range for the last 21 days, right? The average true range is a little over a point and a quarter, so almost 30 seconds, right? Trades in 30 seconds, but okay. Again, the bars are red. Every time you get a pullback between the mid to the upper band, these are all, right, they're sells based on everything I do, okay? As long as the bars are red and the market is making lower lows like it is in here, right? Each one of these makes a lower low. Each time it pulls back in between the mid and the upper Kiltner is a sell. Makes a new low, pulls up, sell, sell, okay? Now, that's trading with the trend, right? That's pretty easy and pretty straightforward. Now, down in here, when we put in a low, you'll notice that the market comes down and takes out that low by only a couple ticks, a couple 30 seconds. Now, down in here, I am looking for a price pattern of some sort. any reason to be looking to go long, to give me a trigger to go long. If you look closely in here, we got an inside pattern, right? This high is slightly lower than this high, and this low is higher than this low. So take a look at down here. We got an inside pattern here. Never took out that high until 3 days later. But look at this bar here. We had an outside, we had an engulfing pattern. This low took out the prior bar's low, and this high took out this high. So you could have been long either here or the break up through the inside pattern here with an initial catastrophic stop loss below those lows. You know, this is something I look for all the time on when trading. But this is a counter trend trade, right? It's not trading with the trend, right? Right? The trend is down, obviously, and each one of these pullbacks, as I told you before, were beautiful shorting opportunities based on the Kiltners and based upon the trend. But these types of setups happen quite frequently if you're able to look at a lot of markets looking for the setup. I mean, look at this. Once the market broke up through the high of that inside pattern on this day right here, I mean, as you can see, the market's up, almost 4 basis points. That's $4,000 per futures contract off of the daily, on the daily chart. Let's take a look at this a little further. We've broken up through that high, which I deem is somewhat significant, and then I'm looking at the next level right there. All right, again, right here, this high here, 133 and 21/32. We've taken that out marginally. Okay, taking it out marginally. Look at what we've got here. We've got an outside, we've got an inside, followed by an outside. So this is, I think this, where we're at right now, is a big, if we start breaking up through these highs, I think we're going to run up and try to test this 200. But again, the level here, I want to know, right here, we start closing up through 133 and 23/30. Right? These highs, both of these highs, 133 and 23/30 and 133. Look at equal highs right here. If we start breaking up and closing above those highs in the next couple days, I think the next level that the 30-year bonds will test this high here, then this high, and then right in here. So, all right. So I want to show you that. Let's take a look at gold real quick. Okay, gold. We've made a nice bounce from this low, so I'm going to measure from low to high, right? And look at this. We're sitting at the 50% retracement here. I think this low is a critical low. If we start breaking down through this low, right? If we close below this low, I think there's a chance to retest this low down in here. Okay? So, but that's what I'm looking at here. If the market comes down and tests this low, we can't close below this low, and we get some type of price pattern in here, I'd be looking to go long this market again. All right, and then let's finally look at the E-mini S&P 500 futures market. Again, all-time high in the market was put in place right up in here. We'll pull them back. We're getting close to October, so I would not be surprised if the market retests this low down in here at some point in the next 45 days or so. But again, what I want to do here, I want to measure the fibs from low up to this high. This last swing is where I'm measuring, right? From this low to high. As you can see, we've hit the 38.2%. 50s here, 60s here. If we start breaking down through the 50 exponential, the hot pink, start breaking down through that 61.8 of this last move up, then I definitely think we're going to retest this low. The next level after that I'd be looking at would be right here. But of course, what you'd want to do, if we start breaking down through this low here, I would want to look at the yearly's low right here and measure the fib of the entire year's up move. Okay, so that the 38.2 of the entire year is just slightly below this low. And then, of course, the 50 of the entire year is slightly above this high. So I'm looking at those levels. Again, if the market pulls back and let's say creates a price pattern, either the inside or the bullish engulfing pattern, somewhere in here, right? I would be all over it. I'd be looking to go long this market if we were to get a price pattern on a deeper pullback down in this area. All right, so again, hope that helps. Again, we talked about the TBT ETF. We talked about the 30-year bonds. We talked about the S&P and gold. So hope that helps. Have a great, great Saturday, and I will be back with you on Monday. Bye for now.